Cryptoverse DAO. If you're catching this live, welcome. If you're catching this on YouTube, also welcome. Subscribe, drop a like, drop a comment, do all of that YouTube stuff. But let's roll right into the news. We've got an interesting spread of content for you today. The first piece of news we're going to be looking at, we're revisiting Kwon. Kwon, as you definitely know this if you're plugged into crypto at all. The Terra Luna crash, that whole thing, that was Kwon, the man behind Terra Luna and that whole fiasco. What happened was, a little bit of an experiment with algorithmic stablecoins. Didn't really go as planned. It wasn't handled as well as it could have been handled. It was handled quite badly. And there was a lot of speculation. It was such a big deal in the crypto sphere, for lack of a better word, that people genuinely thought, myself included, I didn't think that this was too far-fetched. People were talking about how it was BlackRock and all of this, a lot of conspiracies on conspiracies on conspiracies. At the end of the day, it was just a bad situation that led to a lot of people being hurt, a lot of people losing their life savings, losing everything, really. There was a lesson in the whole Terra Luna thing. There was a lesson to be learned, but, when people are hurting, it's difficult to hear the lesson, isn't it? But then, the people that are running the system, there were steps that could have been taken early, but, those steps weren't taken. Now, what has happened? Like, the downfall of Terra has sent shockwaves across the globe, as the article says. We have got a video from Anonymous. I was on LinkedIn today, of all places, and I saw this video pop up on my timeline. And then one of my friends and colleagues texted me about it, and he was like, did you see this Anonymous thing? And I was like, bruh, yeah, I saw it on LinkedIn. It was so weird. Here's what's happened. Anonymous is coming for Kwon, the man behind Terra. Let's take a look at the article from Watcher News. While some went under serious loss, I think they mean to say serious loss, and yearned for justice, a few others sent out serious threats to the creators of the project. We've seen regulation kind of tighten up in South Korea as a result of this. People who worked for the company behind this whole fiasco, they were kind of, not allowed to leave the country for fear that they would, not return, go to some haven somewhere, they were not allowed to leave the country. I think they had their passports confiscated. Take that with a grain of salt, though. Actually, no, take that with one of our YouTube videos. Go watch the news episode where we covered it, because we did, talk about the whole South Korean crackdown in terms of regulation. Now, South Korea is extensively probing the dramatic decline of the crypto project, but Kwon is, he's scot-free, he's just living as a free man. He even went on to roll out another project which really annoyed a bunch of people, including the notorious hacktivist group, Anonymous. I'm sure pretty much everyone knows who Anonymous is as well, but just in case you are not aware, they're kind of like ethical hackers, do-gooders type thing. They want to make positive change in the world. They're white hat hackers, basically, and they go after, very, very public sort of campaigns. They go on public campaigns against things, and this is a part of their modus operandi. What they'll do is they will warn somebody and then come for them, basically. Warn someone and then just take matters into their own hands, is what they say. So they've rolled out a YouTube video, and in it, the hacktivist group, the Anonymous, I think, is a group of hackers, but one hacktivist was seen affirming that Kwon would be brought to justice. In addition to this, the group strongly believes that there were many more crimes that Kwon was involved in. To be fair, this is the first time Anonymous has popped up on my, in my kind of on my radar in a while. I don't really remember the last time that Anonymous was brought up in any serious capacity. But this is a nice little blast from the past. Let's take a look at the video together. I'll take you directly to the Twitter page. And we can watch it on here. Bigger viewer. Gosh, gosh, they're so dramatic, aren't they?
Greetings, citizens of the world. This is a message from Anonymous for Kwon. The past several months have been bad for crypto and the economy as a whole. We were likely going to experience some pain in the crypto industry because of the macro environment regardless of what was happening internally. We were also due for another bear market this year, but the actions of Kwon, the founder of the Terra Luna ecosystem, is single-handedly responsible for scamming billions of dollars away from retail investors. Kwon made a name for himself with his arrogant tactics, trolling competitors, critics, and acting like he would never fail. In fact, he said that he found it entertaining to watch other projects fail.
I wonder how many of these companies you think are entering the space just because it's hot and there's a lot of funding versus the ones that will still be here, like 2 to 5 years later.
95% are going to die.
Yeah.
95% are going to die. Yeah. Yeah, there's also entertainment in watching companies die too.
There's entertainment. Oh man, that's so evil. At least you get to learn from it, right?
On one occasion, he called a journalist for asking him difficult questions. However, he was quickly knocked down by the markets. The louder they are, the harder they tend to fall. News has now come to light that he was cashing out over $80 million each month as Luna was successful. Kwon denied these accusations in a roundabout way, but not exactly. In a recent Twitter post, Kwon denied cashing out $2.7 billion, but that doesn't account for the $80 million each month that he was apparently taking. He claims that he lost most of his money along with everyone else in the market, and that he was also all in on Luna. The information that he was taking millions from the protocol each month comes from testimony of Terra Labs employees during interviews with the SEC. As a result, Kwon is being investigated for money laundering, in addition to the other accusations against him of malice and fraud. Sometimes people just make mistakes, and sometimes businesses fail, but there is
Oh, but there is a what? Come on, Anonymous, I want to hear the whole thing. Alright, I guess that's not from Justin Lee. Well, there you go, man. There you go. I did not know that he was apparently cashing out 80 million allegedly per month. That's kind of crazy. But let's take a look at the full conversation on Twitter actually, because this is something that I do like to do during the news kind of breakdowns. Take a look at the what the community is saying around these things. Bruh. What do you guys think about this? Let us know in the comments, and then we'll talk about this after. We'll talk about this in the community discussion section. And if you guys watching on YouTube want to be a part of these community discussions and break down what we talk about on the news live, join the Discord, man. There's a link tree link down in the description. Hit it. Just decide how you'd like to engage with us, and we'd love to welcome you to the Cryptoverse, man. But yeah, so several things that Kwon stated in the past have now come back to bite him in the ass. The founder of Terra previously stated it was entertaining to watch projects fail, as you saw in that interview, and the interviewer was like, "Oh my god, that's so evil," but yeah, like entertainment, that whole didn't sit well. Just didn't sit well with leaves a bad taste in the mouth after you find out that this dude's kind of like been cashing out from his protocol the whole time, while others were losing like everything, literally. If you think about it proportionally, it's kind of it doesn't leave a good taste in the mouth. Anonymous further suggests that there was a trail of destruction. Okay, so Anonymous decides to specifically target Kwon because of his quote-unquote bad intentions from the very beginning. The hacktivist noted that businesses do fail, but Kwon did not entail any good intentions. Trail of destruction that was still to come to light. They added, Kwon, if you're listening, sadly, there is nothing that can be done to reverse the damage that you have done. And that is really the sad part. At this point, the only thing we can do is hold you accountable. Make sure that you are brought to justice as soon as possible. Is it enough to scare Kwon? I mean, I'm sure he's plenty scared. I mean, he's got a huge target on his back, hasn't he? The Terra video managed to garner a total of 17,000 views at press time. Anonymous has posted a couple of videos. Most popular ones were Elon Musk and Vladimir Putin. Yeah, Anonymous garnered a lot of backlash for being non-threatening. One viewer commented, "I miss Anonymous. Is this not just like watching the news? It's basically them just saying they're investigating it. So are a lot of people. I'm pretty sure this guy owns a computer or a laptop or even a server. Can you not just break the passwords of anything anymore? Where are the real anonymous players? Yeah, to be honest, to me as well, it doesn't seem as threatening or as impactful as it used to back in the day. You know, when Anonymous was like this really scary kind of group of hackers. I think that really speaks on what the world has become now. But I'm not going to go on a tangent. This is this is what has happened. We will have to wait and see what Anonymous actually does to bring Do Kwon to justice. Now, moving on from Anonymous, let's talk about Goldman Sachs and Celsius. Celsius has been freaking crashing and burning, my god. And now Goldman Sachs are leading an investor group to buy Celsius's distressed assets at steep discounts, which makes sense. I mean, you know, you buy distressed assets and you know, get them under your management and boom, they go up in value. It makes sense for Goldman Sachs, but the thing is that nothing has been confirmed with this story. I think what they say is two people who quote unquote are close to the situation have made these, you know, reports. So the Wall Street firm is seeking $2 billion apparently in commitments from investors to purchase Celsius's distressed assets. Here it is, according to two people familiar with the matter. The proposed deal would allow investors to buy up Celsius assets at potentially big discounts in the event of a bankruptcy filing. Goldman Sachs appears to be gauging interest and soliciting comments from Web3 crypto funds, funds specializing in distressed assets, and traditional financial institutions with ample cash on hand. The assets, most likely cryptocurrencies having to be sold on the cheap, would then likely be managed by participants in the fundraising push. Celsius has tapped restructuring advisory firm Alvarez and Marsal, the Wall Street Journal reported on Friday afternoon. Goldman Sachs itself did not respond to requests for comment on this developing story. Celsius used to have more than $8 billion lent out to clients, $12 billion in assets under management in May. And then in June, literally very early June, we covered this when it happened. It announced that it's going to just halt withdrawals from its platform due to quote-unquote extreme marketing conditions. And those extreme marketing conditions got even more freaking extreme as a result of that announcement. And Bitcoin, we saw Bitcoin's price fall below 20,000 USD as well. Now, in addition to hiring Alvarez and Marsal, Celsius has tapped restructuring attorneys from law firm Akin Gump Strauss-Hauer and Feld. The Wall Street Journal again reported earlier this month. Citigroup has also been enlisted by Celsius to advise on possible solutions, including an assessment of an offer from Nexo, a rival crypto lender. Now, Akin Gump, I just like saying the whole name because it's fun. Citigroup and Akin Gump Strauss-Hauer and Feld have both recommended Celsius actually file for bankruptcy. Once again, according to quote-unquote people familiar with the matter. Citigroup declined to comment. Akin Gump Strauss-Hauer and Feld did not immediately respond to requests for comment. Interesting. So we've had a few updates to the story. We're just going to have to wait and see. We're just going to have to wait and see what happens. But let us know what you think. Do you think Goldman Sachs is actually going to buy Celsius? Does it make sense for them to buy Celsius? Or do you think this is just a bunch of noise, a bunch of smoke and I don't want to say smoke and mirrors, but just smoke and noise, isn't it? What do you think? Let us know in the comments below, and we'll chat about it in the live discussion in just a little while. On the topic of distressed assets, let's talk about Three Arrows Capital. They're a crypto-focused hedge fund, right? And they are currently facing a deadline for $670 million that they need to pay back, right, in loans, or they default. Which could have, if they do default, it could have a ripple effect across the digital asset market as a whole. So they're at the center of crisis, and the deadline is drawing nearer and nearer. It's to Voyager Digital, the $670 million in loans, and Voyager has stated that it intends to pursue recovery, and is taking advice from its advisors regarding legal remedies. So, You know, it doesn't sound too threatening, but it sounds like corporate speak for like we're not just gonna let this slide, bro. Like, you know, where's the show me the money? Three Arrows Capital or 3AC, they're facing a liquidity crisis, is what's happening. There's been margin calls on its loans, massive slump in the crypto market as a result. You know, what's happened? They're facing default. So Voyager Digital, that's a digital asset brokerage. They said last week that it had lent 3AC 15,250 bitcoins. That's a lot of bitcoins, as well as 350 million US dollars of the stablecoin. Oh, 350 million USD of the stablecoin USDC. At Monday's prices, the total loan equates to $675 million. And they've given not Voyager Capital, they've given 3AC the deadline of June 24th. It is now June 27th. And the entire outstanding is supposed to be paid today. Take a look at that. Neither of these amounts have been repaid, said Voyager last week, adding that it may issue a notice of default if 3AC does not pay the money back. So keep an eye on just the internet. Stay on Twitter, because you might see the next step in this process literally within the next few hours. Neither of these amounts have been repaid, and Voyager says that it intends to pursue recovery, legal remedies. Neither of the companies were immediately available for comment when the CNBC reached out. And how did they get here? Yeah, let's take a look at this. So one of the founders, Zhu Su, Zhu is known for his incredibly bullish view of Bitcoin. He said last year that the world's largest cryptocurrency could be worth $2.5 million per coin. But then, you know, we went into a bear market and it began, you know, crypto winter began. The seasons of crypto, right? Zhu said on Twitter that his quote-unquote super cycle price thesis was regrettably wrong. The onset of a new so-called crypto winter has hurt digital currency projects and companies across the board. Three Arrow Capital's problems appeared to begin earlier this month after Zhu tweeted in a rather cryptic message that the company is in the process of communicating with relevant parties. Here's the tweet itself. June 15th. We are in the process of communicating with relevant parties and fully committed to working this out. I mean, yeah, very cryptic, very cryptic. What does that mean? And no follow-up. We've had silence. So, you know. Now, the Financial Times has reported after the tweet that US-based crypto lenders BlockFi and Genesis liquidated some of 3AC's positions. We covered this on the news as well. So they've borrowed from BlockFi, but they were unable to meet the margin call. That is a situation in which an investor has to commit more funds to avoid losses on a trade that's already been made with borrowed cash. And then, yeah, we talked about Terra Luna just a second ago, the so-called algorithmic stablecoin Terra USD, and its sister token Luna collapsed, right? 3AC had exposure to it. Not symbiotic relationship, you know, everything's connected, everything kind of falls together. 3AC co-founder says that the Terra Luna situation caught us very much off guard. I mean, yeah, same, caught everyone off guard. Contagion risk. I mean, yeah, ripple effects throughout. We talked about this just a second ago with Celsius. 3AC is still facing a credit crunch exacerbated by the continued pressure on cryptocurrency prices. BTC hovered around the 21,000 level on Monday, down to about 53% this year. Meanwhile, the Fed Reserve has signaled further interest rate hikes in a bid to control rampant inflation, which has taken the steam out of riskier assets. Yeah, we're fully in a bear market, basically. 3AC, which is one of the biggest crypto-focused hedge funds, has borrowed large sums of money from various companies and invested across a number of digital asset projects, which has sparked fears of further contagion across the industry because they've got their fingers in a whole lot of pies. And if one of the fingers dies, you know, the pies die too. Maybe not the best example, best analogy, but hey, come on, it's Monday, right? The issue is that the value of their assets, of 3AC's assets, as well has declined massively with the market. So all in all, just not good signs. This is what Vijay Iyer, the Vice President of Corporate Development and International at crypto exchange Luno. Okay, that interestingly enough, Luno was the very first crypto thing that I entered DeFi very late, and that was like the first app. I don't use it anymore, but literally, wow, blast from the past. What's to be seen is whether there are any large remaining players that had exposure to them, which could cause further contagion. A number of crypto firms are facing liquidity crises because of the market slump. Celsius, again, look at it. We're literally seeing contagion across the articles we're looking at today because everything is connected. Yeah, so Celsius promised high yields for depositing. Yep, pause withdrawals for extreme market condition reasons. And Babel Finance as well has said this month that it is facing unusual liquidity pressures. So who knows? We might see Babel Finance. They've halted withdrawals too, so we might see them on the news pretty soon too. And that's kind of like the breakdown with companies falling apart, exchanges falling apart. Let's look at something a little bit more in line, I think, with the holistic vision of this DAO, which is blockchain mass adoption, not just, pump and dump crypto bag, but, getting this technology out to the masses in a way that is meaningful, sustainable, and scalable. And how do you do that? You do it through education. That's why we're here every day pushing free education for you guys. Educating regulators will help to mitigate risk, says Figment executive. Robert Ellison noted, good old Ezra Ruggiera bringing us the sauce. Robert Ellison noted that a regulatory framework for staking is achievable because the concept is very easy to understand. This is what it is. I mean, the concepts have a very high, just blockchain basics, right? Have a very, very steep looking learning curve, if that makes sense. The learning curve is actually not that steep. It just looks really steep because there's so much jargon, so much slang, so much so many colloquialisms and just like conventional things that people all seem to agree that they understand. And if you're not in a group that is in agreement over a bunch of things, you feel like you're out of the loop, which can make you feel like you don't understand things. When in reality, the things these guys are talking about are very, very simple concepts. It's just the words sound kind of difficult because they're a bit unfamiliar, because they're new words. But then again, if you airdropped yourself into Victorian times and you said, my iPhone's out of battery, I can't go scroll through reels on Instagram, they would look at you like a fucking crazy person. But the thing you're talking about is so simple, right? Literally the execution of it. You pull out your phone, do the thing, it makes sense to you because of context. And this is something people have talked about with investors. Investor sentiment basically is more bullish when investors understand what they're putting their money in, right? And it's not just big institutional investors, it's just regular folk investing their time too, investing themselves, not just their money. Time is money too. You invest your time. To invest your time in something, you've got to place more value on it, in my opinion, than when you invest your money. At least for me personally. And honestly, with the whole drawing in investors thing, it's just about drawing in people, if you think about it, because there's so many brilliant, intelligent, wise people that are just not in this field. They're just not in this field yet. And the field is expanding. It's just, the education needs to be there. The education needs to be accessible. And yeah, this is kind of like, they're talking specifically about educating regulators about the way that these systems work so the regulation can be done better. But I feel like it is holistically just a very good point, an interesting point to be, thinking about, ideating about. Now, Cointelegraph's managing editor Alex Kwon interviewed Figment's staking marketing director, Robert Ellison, at the European Blockchain Convention 2022. They discussed topics like educating regulators on blockchain and crypto, how businesses navigate uncertain regulatory landscapes, and the regulation of staking. According to Ellison, it's crucial to educate regulators in the space to mitigate the risks of their going overboard without understanding the basics. The Figment executive mentioned that clear understanding is important because of the complicated nature of the space. He says this is the battle we're fighting, and it's interesting to see that balance geopolitically to some countries versus others, and we hope that they just really listen and learn. Apart from educating regulators, the duo also spoke about how businesses navigate the space amid regulatory uncertainty, some companies opt to go ahead with their projects and they'd rather ask for forgiveness later than permission in advance. And on that, Ellison says, I think that's a business sentiment where you can ask for forgiveness. You're not going to wait. You can't wait. You got to move forward, right? And some of that is more risky. He also commented that some regions provide more certainty for businesses than others. Wrapped assets, that's an example. The Figment executive explains that if you're in America, getting into wrapped assets is a riskier move because you're not sure if the regulation is going to come or not, or soon or when or later, like when is it going to happen. When asked if a regulatory framework is necessary for staking to go mainstream, Ellison noted that a framework for staking is very achievable. However, the staking marketing director said that regulations for staking are not a priority for regulators, highlighting that it is achievable because staking itself is quite easy to understand in some regards of what you're actually doing. But to answer the second question, he really doesn't think it's a priority at all for regulators. Regulations for staking are not a priority for regulators. According to Ellison, lending platforms and stablecoins are on the list of priorities for regulators, not regulations for staking. Right, lending platforms and stablecoins. That's what they're looking at. He notes that currently staking is not on that priority list, as regulators put what is the most risky to the public in their focus before moving on to the less risky aspects of crypto. Makes sense. Makes complete sense. And what does it show you? It shows you that no matter what aspect of this crypto sphere or crypto world or DeFi world or blockchain world you're in, it is so important to understand what you're doing. One of the reasons that people feel bad or feel, one of the reasons that people view regulation as a negative thing is because of what it could mutate into. And that mutation occurs as a result of misunderstanding of the technology or the concepts or the ideas that you are trying to regulate, right? So if you push transparency and push understanding and knowledge, which, Bitcoin, transparent framework, right? Blockchain is transparency. This is what you see. So interesting piece of news on regulation over stables. Let's take a look at some more talk about regulators. Regulators may favor centralized stablecoins now after the Terra crisis. Thomas Moser hinted that regulations might take time as they could wipe out decentralized ecosystems like DeFi. Let's take a look. So, Swiss National Bank deputy head, of course, Thomas Moser talked to Cointelegraph editor Aaron Wood and discussed the ongoing trends in CBDCs, stablecoins and regulations. Central bank digital currencies, basically digital assets that are not decentralized. DeFi that isn't DeFi, basically. Stablecoins and regulations during the recently concluded European Blockchain Convention 2022. Moser talked about the innovation and adoption of private stablecoins and central banks' plans regarding CBDCs. He reckons both could coexist. States that the function of CBDCs would be very basic, and that private stablecoin issuers could add services on top of them. To be fair, if there isn't, you do see that with privatization and public, privatization versus public entities, when there isn't a profit-seeking factor, there's no drive for innovation, so things kind of stagnate, right? But to be fair, it's not profit. I would say control is a motivational factor in traditional or in like institutional, like entrenched entities, like governments and banks that would control CBDCs in a country. That is a motivational factor, so they might be motivated to kind of pioneer geotagging technology or geolocking technology with stablecoins, where with the CBDC, wherein you could not be allowed to make a purchase in a specific area because it's outside of your area, or you're not allowed to purchase alcohol or cigarettes because of information that your government has from your healthcare provider or something like that. Like all of that kind of, that it could evolve into that. When asked about the recent collapse of Terra Luna's of Terra USD, the UST stablecoin, and its subsequent impact on regulations, Moser says that it could have a lasting impact on regulators. He says regulators may be forced to favor centralized stablecoins over decentralized ones. My fear is that people will throw all decentralized stable currency in the same category, which isn't true. When asked about developments on the regulations front, he hinted that it could take time. Makes sense. Internet regulation back in the 1990s, regulators took the time to come up with new rules instead of implementing the existing ones, taking the old TradFi stuff and trying to stretch it and force it around. It's like putting a like a garbage bag over like a trash can, but it's like too small, and so you gotta fucking pull it and then it rips, and you like it doesn't work, right? What you do need to do is write up a new set of rules. Makes sense. If you just take the existing regulation and put it on crypto, DeFi will disappear because you'll only have centralized entities that you can regulate with the current regulation. For DeFi, where there is no single entity to be held accountable for, which is really just smart contracts interacting. Yeah, exactly. You need a different type of regulation. Switzerland's central bank is among the select few countries that have begun piloting their national CBDCs, carrying out wholesale CBDC testing in January. Later that month, the Swiss National Bank published a report based on its trials and suggested that the risks outweigh the benefits. Interesting. We've talked about stables before. I think our very own technicals guru Simon was he traveled on holiday. He was on the ground, boots on the ground for Jamaica's CBDC trial. Very interesting stuff. We'll have to wait and see. I mean, the UK is talking about CBDCs as well. We'll have to wait and see. Now, to end things on a happy, wholesome note, dreams coming true, man. I mean, they can. Usually it's the bull run that makes dreams come true, but, they say billionaires are made in the bear market. Let's talk about some good news during the bear market. What has the bear market done? Man, you see all these people, when Bitcoin was at 60,000, all these people, oh, I wish I could buy it at 15,000. Oh, I wish it was down to 10,000, man. I would buy all the Bitcoins. Can you imagine if a Bitcoin cost $10? Bro, I would buy fucking 100 Bitcoin. Bitcoin is literally at 20,000 now, bro. Like, we are there. Everything that you've been wishing for is here. It has come back down. It's finally within reach for you one more time. And who knows, when the next run comes, the all-time high could be 100,000, and then the next crypto winter could only be like 40,000 or something, right? And then we hit like 500,000, and then it's 100,000 winter. Like, we may never see, because of the rate of, it's literally Pandora's box, right? It's been opened. You can't put the toothpaste back in the tube, bro. It can't be done. It's not going anywhere. It's here to stay. I mean, maybe I'm being a bit maximalist and pushing my personal opinions on this, but I do very strongly believe this. And the point is, it's affordable now. Now is the time to buy. This is the dip. This is literally the dip. And what has happened? The dream for a lot of people in the space, a lot of the people who talk about 1 BTC equals 1 BTC, during the, you saw that trending on Twitter, hashtag 1 BTC is 1 equals 1 BTC. Literally, it's a philosophical thing, man. It's a dream. Bitcoin, DeFi, blockchain, it is a philosophy that can be applied to life, the decentralization philosophy. And a part of that dream for a lot of people has been owning one whole Bitcoin. And now, because it's been trading in the 20,000 range, for the first time since 2020, small-time investors have now found a small window of opportunity to achieve that dream, to be able to say, I own one Bitcoin, I own a Bitcoin. Ever since early BTC investors woke up millionaires as the ecosystem gained tremendous popularity alongside the mainstreaming of the internet, investors across the globe have been in a rush to accumulate as many of the 21 million BTC, one Satoshi at a time. With BTC recently trading at the 20,000 range for the first time since 2020, small-time investors found a small window of opportunity to achieve their dream of owning at least one BTC. June 20th, Cointelegraph reported that the number of Bitcoin wallet addresses containing one or more BTC increased by 13,091 over the course of just 7 days. Now, while the total number of addresses holding one BTC saw an immediate reduction in the days to come, the crypto community on Reddit continues to welcome new crypto investors that hodled their way into becoming what is called a whole coiner. That's a new crypto slang. We gotta add that to the slang repository on the Discord. In addition to hodl and bull, bear, and convergence, divergence, all these trading terms, and FUD and FOMO and all these words. We got whole coiner too now. Arbalest22 shared the above screenshot, reveals that it took him, look at that, I finally did it. Operation One Whole Coin is now complete. Fuck yeah, Arbalest. Good on you, bro. Good on you. He revealed that it took him around $35,000 in total to accumulate 1 BTC over several months since February 14th. Oof. He started on Valentine's Day. Who hurt this man? Showing further support for the Bitcoin ecosystem, the Redditor aims to continue procuring Satoshis, or sats, until he accumulates over 2 BTC. Maybe that's going to be a 2-coiner. Who knows? Maybe that's a terrible name. But Arbalest started purchasing BTC from Coinbase and then later started using Strike because of lower fees. Sharing a peek into his future plans, he stated, I am hoping in the future I can treat it more like rich people treat real estate and take loans out against it. Then as it appreciates, just pay off the old loan with the new one, and then boom, that's tax-free income. This is a smart guy. Following suit, another Reddit user, EveningMain5862, posted about being able to own 1 Bitcoin after largely following a dollar cost averaging strategy, wherein they regularly sold smaller amounts of BTC over a longer period of time. Stating, I was able to catch the falling knife and buy just enough to get me over the finish line. No easy feat, just an ordinary guy with an ordinary life. That's it, man. Beautiful. We love to see stories like this. Look at this. Number of addresses with balance equal to or greater than 1. Price in USD. Fell rapidly right after. Interesting. So between June 15th and 25th, the total number of Bitcoin wallet addresses holding more than 1 Bitcoin grew by 873, according to Glassnode data. While falling BTC prices are seen by many as an investment opportunity, Google Search Trend highlights the tendency of other investors to speculate about its demise. Bitcoin dead hit all-time highs over the weekend for search terms. Interesting. So the Google search results reflect peak anxiety for the cryptocurrency markets following weeks of relentless sell-offs in asset prices. But hey, we hodl through it. We learn through it. If you can't buy the dip, learn about the dip. Learn about the dip. Learn the skills you need to... You can still make money in the crypto sphere, man. You can learn how to become a coder. You can learn the skills needed to network effectively and get yourself into the right circles and into the right projects, man. Get yourself the skills needed to become an NFT artist or a Discord moderator or something, man. There's just so much within the world of Discord. Not the world of Discord, what am I saying? The world of DeFi. There's so much within the world of DeFi that is pure opportunity. And I feel like a bear market, honestly, it's less pressure, man. It's less pressure because during a bull run, everyone is in a mad rush to do everything, everywhere, all at once. And, you know, the bear market's quiet. The bear market's quiet. People are... You know, people leave you alone and let you get to work. So you put your nose to the grindstone, build a hell of a rocket ship, hell of an arc, build an amazing arc, and then when the flood comes, you know, you're sitting pretty. You're sitting pretty. It's all good. You're prepped. You're prepared. That is what we want to bring you. We want to bring you that preparation. So if you learned something today or if you just found this interesting, join the Discord, man. We do all of this for free. We give you amazing trading strategies and blockchain education and like educational courses and then like news breakdowns as well, live discussions, community. We want to empower you to make the best possible decisions in this space. So yeah, in the interest of that, join us, man. I've been your host, Dharma Sutra. This has been the Cryptoverse DAO. Thank you so much for being a part of it. I hope you enjoyed. Hope you enjoyed the rest of your Monday and the rest of your week. Yep, Dharma out. Bye-bye.